Happy Tuesday. Welcome back to Tips from Elaine's Desk. Elaine Proby here, CEO of Proby's Tax and Accountant, and Tips from Elaine's Desk. Okay, so I want to also say this is tax day, guys. Tax day for those of you who need to get your taxes filed or an extension because it's fairly late right now. April 18th is tax day. Unless, of course, you're in one of those disaster state or disaster region or disaster, a city or wherever, counties, then, you automatically have an extension. But if that is not you guys, make sure that you do get an extension file. So I just want to put that out there first because today is tax day, right? It's all over the news. So nobody can't say they didn't know. So today we're going to talk about navigating tax implications of business transactions. And I know when you talk about taxes, it just sounds so complicated to everybody. Although I'm a tax expert, I know that a lot of people have issues with just listening or hearing about taxes. And some people are just so confused about the whole process. But again, you're not by yourself. It is a confusing process. So I'm just going to make this just as simple and just straightforward on the points I'm going to make today regarding navigating tax implication of business transactions. And so we're going to jump into this and make it real short and sweet. And the reason I'm doing this is because, once again, people are calling me and asking about certain transactions, business transactions that they have made, business moves, investing in certain things like that. And they're not very clear and how it's going to impact their taxes. So let's just talk about the first point today, guys, which is when you are buying or selling a business or investing in a business or merging with some other company, guys, you have to know some points about what is the tax implication. So you want to do the first thing is to consult with a tax expert. Talk to somebody who can advise you before you make these moves, right? Because what happens is if you're buying a business from someone, there's tax implication there. You have to know what that business is about. If you're selling your business, some people have sold their business simply because maybe, they have been in it for years, they want to retire. If you're selling your business, if you're merging with someone else, or even if you simply want to invest in someone else's company, you want to know that there's some tax implication. Of course, always when there's any type of transfer of monies, assets, things, right? Whenever there's any transactions like this, guys, there's some tax consequences that's going to be there. So the first point today, you want to consult with a tax expert before you make any serious business transactions, just to make sure that at least you are taking advantage of the tax implication. You just don't really do it blindly and all of a sudden wind up with a big tax bill that you could have avoided. Okay, so want to welcome everybody to jump on here today. Hi, Malcolm. How are you doing? Blessings. Okay, greetings to you too. Cognac, thanks for jumping on here. Hey, Lorna Smith, thank you for jumping in. You guys hit like and share on this video. So once again, like I said, this is tax day. So we're going to talk about some tax implication with business transactions, major business transaction. The first point is to consult with a tax professional before you do any major transaction, okay? And so we want to make sure that at least you take advantages of what the consequences are. Tax laws are different depending on the state. Tax laws are different. Federal is different from some state. There's a lot of conformity that a lot of states doesn't do with the federal laws. So you could be impacted one way with the federal if you have any major transaction or buy a business, sell a business, merge a business, invest in a business. And the federal taxes could be one way, the state taxes a different way. They don't conform all the time. So you want to know this in advance so you can plan ahead. You might want to change state when you're trying to do some transaction, right? Simply put. Okay, so that's the first point today, guys. So let's jump into our second point today. Second point is understand the tax implication of the transactions, right? So if you are, let's start with selling a business, right? I know I have some clients who have been in the business for years. They're retiring. They think it's time to give it up. So they really want to sell the business and move on to retirement, move out the state. Some of them want to just buy a house and go someplace else. And so I've got clients who are in the market of trying to sell their business. And if you are selling a business, guys, you want to make sure too that you have all your tax consultation in place. One, because based on the transaction and based on how you structure that sale, you can give away half that money to taxes if you don't structure it properly, okay? Because depending on what you're selling, if you're selling assets, then it could be capital gains tax, which is not as bad. If it's your consultation, if it's inventory, if it's any type of services that your business is performing, it's taxed at an ordinary tax level, which is a higher tax bracket. You have to structure this properly to make sure that you take advantage and not absolutely give away half the money for the profits that you make from selling your business in taxes. So important, because this is the thing. Once there's cash involved and there's a sale and there's a profit and it's taxable, the whole key to this is how much taxes I'm going to have to pay on this transaction. And that's what you want to know in advance. So do some planning ahead, right? Some ways to defer that, guys, is to do installment, what they call installment sales. So this way you could get that money in installment, maybe over the years. You might want to extend that money over several years. So have the person pay you for that sale on a yearly basis so that all the money doesn't come in all at once. And then you can defer some of those taxes, and maybe your tax bracket changes as you go along. So if it's ordinary taxes, whatever that bracket is now, 5 years from now, when you're collecting that money, your tax bracket might change. You may have retired. You're not paying at a high tax rate anymore. So you would have deferred taxes. You deferred that money, that profit, defer the taxes. So there's ways to plan this out. So the key here is make sure that you plan ahead. Any major transaction, buying or selling a business, you want to make sure that you plan ahead so you can structure this transaction so well that you can get the best tax implication, the lowest taxes paid in out of this transaction, right? This is the key. So what it is, She Rise. Thanks for jumping in here. You're my tax expert. Thank you. All right, she said you're my tax expert. And you know what? Where is my lovely, beautiful glasses? I think I need to keep these things on. Let me know if you guys love these glasses. Look at this. All right. See, this is perfect. I definitely need to do some planning now that you said that. Black and viral. Okay. So yeah. So this is super important, guys. You don't want to give away all the money that you make. You spend years building your business. Now you're selling it. Now half of it goes to taxes. And then, of course, your retirement is cut short. So third point today, we are talking about navigating the tax implication of business transactions, such as buying or selling or merging or investing in a business. So the third point today, guys, is keep accurate records. And I don't want to make this complicated. Keep accurate records. First of all, if you don't have accurate records, let's say you're trying to sell this business. How do you know what the business is worth? You don't have accurate financial statements. Anybody that wants to buy your business is going to say, let me see your financial statement. Let me see what the net worth of the company is. How much I'm going to pay you for this? How much money are you making? What is the profit margin? What is the company's net worth? They're going to want to see this information. And without you having accurate records, financial records, they will not be able to see this. So you cannot say, I'm selling my business for $1 million or $5 million when you cannot produce accurate financial records. Very important. Keep accurate records. So you have to do that for those reasons. Second of all, the main thing here is you want to make sure you're not paying in. What is the word? Keyword. Too much taxes. If you do not have accurate record, you're not taking advantage of all your deductions. You're not paying in taxes, any more taxes than you have to, because what happens is you do not know what you're writing off, what you're deducting. You don't even know half the time what your real income is, let alone what is your profit. So now you're sending money to the government just because sometimes they send you a bill. They tell you that you underreported your income. You don't have the information to know that, to dispute this, to even know that it's wrong, all right? So what do you wind up doing? Paying the bill because you feel like you don't want to have a problem with them. I see this happens all the time. So people will pay a bill because they get it, because they don't know why they got it. They can't compare it to anything that's accurate, so they could dispute it. So it's so important, guys. The key here is not to pay any more taxes than we have to. Why work so hard for this money and pay back in taxes? Keep accurate records, pay as little taxes as possible, and be able to have proper financials in case you want to, one, get a loan, get something from the bank, you want to sell the company, which we're talking about here, major financial transactions. Again, I have clients who are getting ready to retire, who have run their business for over 20, 30, 40 years or so. They are willing to get out of the business and retire, and they want to sell. So I have several clients who is interested in selling their business. And so this is one of the reasons why we're talking about this. And the next thing too is that I have clients who are interested in investing in other business ventures. And one of the reasons that we're discussing this too is because some of you, when you invest in a business, again, you feel like you should be able to write it off. I have clients that have invested $50,000 in business. Can I write that off? Is it a deduction? You made an investment. It's not a deduction. You can write it off. So there's a lot of reasons why you need to make sure that you consult with a tax professional before you make these moves, any major business transaction, right? Thanks for jumping on here, Laverne Smith. So you guys, let me go back and recap. And I think I need to read what Black and Barrow said. Can you help me get my financial records together so I can get funding from a bank or investor? Of course, definitely. That's something that could be done. You have to, usually they want to see about 3 years worth of financial statements and about 3 years worth of tax returns, just to make sure that you're solid, if in fact you're in business that long. If not, they'll just go by some financial projection and your tax returns, right? The most recent ones. So let's recap this point today, guys. Navigating tax implications of business transactions, whether you're buying or selling a business, whether you're merging, whether you're investing. First point, you want to consult with a tax professional before you make any really great moves, anything major in your business. Make sure that you talk to someone who is an expert at taxes, because you want to make sure that you save all the money you can from taxes. You don't want to sell your business or any type of assets, make some money, and then give it all back to the government. Half of it, at least half of it. That's what I've seen at times, right? Second point, understand the tax implications. Try to structure this process, this transaction, in a way to where it will help you to have the least tax burden as possible. Keep that in the forefront. Whenever there's money transaction, keep it in the forefront, how you can structure it to where the tax implication is least. Sometimes you could defer the gain. There's, if you're selling a property, there's 1031 exchange. There's different ways to do the stuff, guys. So important, right? And the third point is keep accurate records. How do you know what your business is even worth if you do not have accurate record? How can you get any type of funding? How can you get investments? How can you not pay more taxes than you have to if you don't have accurate records? So third point, very important. Can't emphasize that enough. Again, so that's all I'm going to say regarding taxes. Again, I know it is a very complicated issue for most people, but today is tax day. Today is tax day, so we got to talk about taxes, right? We can't avoid it. Any transaction that we do, for the most part, is tax implication, and there's sales taxes, income taxes, all these city taxes, just, you name it. Everything is tax. We might as well understand it, even if we don't want to. We better get a handle on this, right? So, hi, Norman Strong. Thanks for jumping in. Margie. Bashan Smith, thank you for jumping on here. All right. Okay, guys, so those are the 3 points today. I'm going to leave it at that. I want to make sure that you guys are fully aware of our panel discussion that we're going to have on May the 20th. This is very, very important. I had a conversation over the weekend with some potential clients who are in business, who are planning on getting the business to the next level, still a little confused about the process and what they need to do. I want you guys to come to this panel discussion, powering your business forward and unlocking the secrets of business success. It's a brunch on May the 20th. Make sure that you come to this. You're going to have a chance to ask your questions on the spot, get them answered. There's going to be folks on there, as I mentioned earlier, about business loans. There's going to be bankers there talking about business loans, lines of credit, so you get that, how to structure your business, how to manage and operate it properly. There's going to be PR and marketing information for you guys. Make sure you come to the seminar. So sign up at elainesdesk.com. Go there and register. It is free. If you want the brunch, and you have to pay for the brunch, but again, the information is free, so make sure that you do come. elainesdesk.com. So go there and make sure you guys register and pass the word around. Okay, so thank you. Connect said thank you. All right, and then those of you who haven't started your business yet, again, there's so much information at elainesdesk.com. There's a free webinar there. Go and listen to it. I've seen a lot of clients there. because the questions they're asking me, there's a video on there that can explain everything to you. A lot of us can read and look at other stuff, but there's a lot of information there that you can listen to. And then, of course, if you guys still need any further clarification, you can go to elainesays.com or probiztax.com and book yourself a free 15-minute consultation so you can get more information, more clarification, again, so we can get this clear, because I'm telling you, it's so much better once you understand the process. You cannot get enough information. Again, keep learning. You can't get enough information, right? And then it's a lot more fun because you have clarity on a lot of stuff, right? As you can tell, I'm truly excited about it. So we're all these over 35 years doing this stuff and watching business grow, right? And helping them to, to create wealth and make millions of dollars. And like we said before, 2023 is our year, so we're going to make sure that this happens. So you guys come back here on Thursday. What are we talking about on Thursday? We are talking about 2023 is our year. On Thursday, we are going to be having another discussion at 1 p.m. You got so much free information. This is easy. This is going to be April the 20th at 1 p.m. Developing an abundance mindset and focusing on wealth creation. Developing an abundance mindset. Again, mindset is everything. If you're not in the right frame of mind, guys, I don't know what to tell you. There's no way you can succeed in this life, personally, business-wise, whatever you do, you have to have the right mindset. And what we're here for is to keep everyone in check so we can help each other to maintain the right mindset and move forward and be successful, right? That's what we gotta do, help each other. So with that said, I think that's it. I'm gonna be up out of here. I want you guys to be any more confused. Don't forget, this is taxes. If you are in one of those disaster zone, disaster county, a lot of people is not concerned. You don't have to file your extension, but if not, make sure that you get that in today, guys, especially if you're going to owe taxes, because you will be charged a late filing penalty. Again, giving away more money than we need to. All right. All right, you guys. So Provis Taxes Accounting can help you with that as well. We do taxes in any state. So look, no matter where you are, you can get it done. Everything is online. Go to our website at provistax.com. Okay. We are going to be up out of here this Tuesday. I will see you guys back here Thursday. Let me get back on these taxes. So you guys take care of each other and take care of yourself. All right. See you later. Bye-bye.